Tanger is one of the largest REITs in the U.S. with 34 shopping centers in 22 states across the U.S. with more than 400 brand name outlet stores. How do you like that? I'm advertising your company here.
Thank you, Betty.
Okay, so Heath was just talking about, obviously, this retail rout that we're seeing, right? However, your stock is what, up 5% so far this year? Tell me what's going on.
Well, consumers love a bargain. And in good times, they need a bargain.
But even the Targets are getting hit, though, and the Walmarts.
We're a totally different distribution channel than Walmart and Target.
Right.
We are the only distribution channel where brand names and designers sell directly to the consumer and cut out the middleman. So the consumer gets the best bargain every day.
Right. Well, and you have seen that, obviously, with some of the traffic that you're getting, right? Tell us a bit about the traffic.
Well, our traffic has been trending up about 6% so far this year. Our sales are up about 6%. Our retailers are doing well. And the consumers love to shop in outlets.
And what does this mean, though? I'm looking at some of the data here. Vacancy rates at malls, 9.1%. I think that's the most since 1990. Vacancy rates at strip centers, 11%, a 21-year high. Some might say this may be an indicator to come for outlets like yours, or no?
Well, we've been in business for 30 years, Betty, and we've never ended the year less than 95% occupied. At the end of the first quarter, we were 97% occupied. So there's a waiting list for most of our shopping centers for the world's finest retailers to come in, and that's a reflection of their sales.
But I'm trying to get a sense, what's the disconnect then here between what the malls are experiencing and what your outlet centers are? What is it? What's differentiating between the two?
You get great deals in outlets.
No, you can't just tell me that, Steve. There's got to be something more to that. Tell me.
We have, I don't really know what you're searching for. The distribution channels are totally different. The malls, the better malls in the country with the finer department stores are fortress assets. The finest outlet centers are not replaceable assets.
Right.
So there's probably 1 billion square feet of regional mall space in this country, and there's only 50 million square feet of outlet space. So there's oversupply of space in the malls, and that may lead to the vacancy rates.
We know commercial property prices around the country obviously have gone down, right? And they've become, and they're rebounding a bit, but you know, a lot of them are still depressed prices. So tell me how that gives you the opportunity there to start expanding.
We don't buy somebody else's problems. We have developed our own assets. We have announced several acquisitions of several outstanding outlet centers around the country. So we really don't buy distressed assets. That's a skill set, and it's a different skill set that we've chosen not to enter.
Okay. What about expansion? What are your expansion plans?
We are about to break ground in a market south of Houston. We have development sites in Scottsdale and Glendale, Arizona, and we've just announced a site in National Harbor right outside of Washington, D.C.
Okay, and how many jobs is that going to add?
Well,
altogether?
We just opened a new center in Mebane, North Carolina, which added about 900 jobs to a small community with no government investment. It's all our private capital.
Oh, really?
And Betty, also, we have a partnership with RioCan, which is the largest retail REIT in Canada, and we're going to deliver and build Tanger outlet centers in Canada.
Okay, and are you seeking financing for these expansions?
Well, fortunately, we are the only REIT in the last 2 years to get an upgrade from both Moody's and Standard & Poor's. We're an investment grade rated company. Our stock has done well, as you were nice enough to say. So both the markets are open to us, the equity and the debt market. When the acquisitions close, we'll decide the correct mix for our balance sheet. Right now, we only have about 23% debt. So our balance sheet is a fortress, and we have lots of options.
Okay. Steve, thank you. Great to see you again.
Nice
as
to see
always,
you, Betty.
Steve Tanger, the CEO of Tanger Factory Outlet.